Good morning, everybody. Thank you so much for joining us for our very first webinar of 2025. I'm Nikki Jovicic from LookUpStrata, and I'm also the Managing Director of Tower Body Corporate, and I'm your host. Today's webinar, The Cost of Procrastination, will explore the implications of delaying essential maintenance and capital works in strata communities, emphasising that inaction has its price. The discussion will focus on shifting to a proactive mindset to address issues early and making informed decisions about funding, costs, and selecting contractors. Key questions will address how to balance costs, quality, and time in projects, understand the true costs and tax implications of various funding methods, and improve your financial literacy. The webinar will also tackle the critical need for committee alignment, considerations for project staging, and how to approach projects as opportunities for transformation. As LookUpStrata takes our transparency responsibilities seriously regarding partnerships, I'd like to mention that both Lannock Strata Finance and Sedgwick are long-time sponsors of LookUpStrata. And also, as I mentioned at the beginning of the session, in addition to owning LookUpStrata, I own Tower Body Corporate. So before we begin, I'd like to mention that the information in this session is not advice and should not be relied upon as advice, and you should seek independent advice before acting on the information contained in the session. And as this is a national session, we also draw your attention to the fact that the legislation differs in each state. So I'm delighted to introduce today's panel. We have Paul Morton, CEO of Lannock Strata Finance, joining us. So from a symphony orchestra to working in a bank, to a prestigious overseas business school, to founding Australia's leading strata finance company, Paul has covered a lot of ground. Paul is deeply engaged in the strata industry and is acknowledged as the country's subject matter expert in the economics of strata plans. Michael Allen, partner at Bugden Allen Group Legal, is a leading property lawyer specialising in major mixed-use commercial and infrastructure projects with expertise in airspace, strata and community titles. With well over 30 years' experience, Michael is recognised by Chambers Global and the Legal 500. And Bruce McKenzie is the National Manager for Commercial Services and Major Projects at Sedgwick. With over 30 years' experience in building construction and project management, he's a licensed building contractor and qualified supervisor with a deep understanding of building defects and remediation. And Bruce has held leadership roles in major building safety programs, including Cladding Safety Victoria and Project Intervene in New South Wales. So, Paul, I'll pass over to you to begin.
Thanks, Nikki, and welcome everybody. I think there's always a lot of talk about delay causing problems. A lot of it seems to be anecdotal. So I thought I'd start with actually 3 anecdotes of clients of ours who have had this very problem. So the first one was a property in Parramatta. Originally, they came to us in 2016 with a $1 million inquiry. Finally, in 2023, 7 years later, they decided to borrow, and the amount was $5.5 million. So in that 7 years, the increase was purely due to labour and materials and costs. And what prompted them to actually finally take work was the insurer wouldn't insure if they kept on going. Now, that's a stunning increase. Another one is in Darlington, which is a Sydney suburb. Initially, 500,000 inquiry in 2023. That was increased to 1.5 million late in 2024. Now, here is a combination of things. Partly it was delaying the works, just labour and materials cost increase. Partly it was due to the scope of works increasing because of the damage caused by not doing things quickly. And the other part of it was uncovering further issues. So although it tripled in size, there were 3 different causes for that. And another one in Flinders Street, Melbourne. In 2022, we originally approved a loan of $250,000. By 2024, 2 years later, it had increased to $1 million. Why? Again, the same combination of things. Increase in labour and materials and the cost of the work, and additional defects which had been caused by the delay, rather just uncovered in the work. So it actually is a major issue that we're having to face here. And I'll just leave it at that, Nikki.
Thanks very much, Paul. Now I might move on to Michael.
Thanks, Nikki. There's an inevitability about strata maintenance, and particularly maintenance of common property, of course. Amongst the functions that an owner's corporation has, it's probably its most important, along with ensuring the building and managing its finances. Not only is there an inevitability about it, but the inevitability comes around because of statutory obligation. An owner's corporation is born with the obligation to maintain its common property. And as we know, and the news have been replete with the stories, they often inherit poor buildings from developers. But nonetheless, over time, buildings also degrade, and strata schemes sometimes have a reluctance to undertake maintenance. The obligation to undertake maintenance is in the statute in every state, and you cannot escape it. You have a very short time frame in which to do something. Traditionally, tribunals will give you 2 to 3 months as an owner's corporation to engage and get moving. If you don't after that, you are then liable for the next statutory tier, which is damages. So if an owner is now losing $1,000 a week or $500 a week because their apartment is uninhabitable, or because they've had to reduce the rent because NCAT has demanded that they reduce the rent for their tenant, and they're losing $500 a week, all of that will come down to the owner's corporation's bill, the sort of bill that Paul was talking about a minute ago in one of those examples. So very quickly, a $1 million project in terms of construction cost can turn into a $1.5 or $2 million project, particularly if you've got commercial units in your scheme. So the idea is to get engaged with these problems as quickly as you can, make decisions as quickly as you can, get expert advice from the people who can help you, and then start to take the owner's corporation with you. Communication, expertise, and decision-making in a prompt manner is key to avoiding unnecessary delays and unnecessary costs in this area. Thanks, Nikki.
Thanks, Michael. And Bruce, we'll just head to you now.
Thanks, Nikki. Look, I think both Michael and Paul have covered very well the things that are key in this subject. Talking from a project manager point of view, and what we see on projects we do regularly, is the difficulties with contractors in particular and rising costs. And this is a real problem. Nobody can deny there's been a cost increase right across the board in all sectors. Construction in particular, and then Class 2 in particular, are probably higher than most areas. And what we see is a real difficulty in contractors holding their price for a period of time. And in fairness, they can't, because costs are so volatile in the industry. We're talking about materials, labour, all of those variables, and inevitably a delay in a decision will result in an increase in cost. So part of our role is continually trying to convince owners to make those quicker decisions, whether that be financing or whatever avenue they choose to take. But there's never a good result we've ever seen in delaying for a period of time, 2 or 3 years. We've got some terrible stories of real projects that we've dealt with. And the other point I wanted to make, we are talking about the cost of delay here, and I want to really emphasise the fact that the cost is not always financial. It can be physical, emotional. We've seen a lot of tragic situations on jobs we've worked on where it's taken its toll on owners, and I'm sure we've all seen examples of that, but we've probably seen the worst of it, and it does make a big difference in having a good collective decision made early by experts to get a decision made, move on, and get that issue rectified, whether that be maintenance or, of course, remedial work. There's 2 areas there we're probably going to focus on today.
Paul, this one's from New South Wales, and the question is, I am a strata owner and secretary of a small strata plan of 3 lots for over 50s on the northern beaches of Sydney. Our buildings are 21-year-old 2-storey townhouses that have an expected life of 40 to 60 years. All 3 owner residents are over 70. The roofs are in excellent condition and have been maintained. So our capital works fund does not include an annual pro rata contribution towards the cost of roof replacement in 20 to 40 years' time. We will have died or moved on to care facilities by then. So what obligation, legal or otherwise, do current owners have to fund the roof replacement? We've received estimates of $130,000, and we acknowledge that upon sale, any amounts in our capital works fund account are included in the settlement price.
That's a very interesting question, and it works in a quite interesting way. Now, remembering that there are slight differences in the legislation between the states, but I'll focus on New South Wales because this is a New South Wales question. In New South Wales, the obligation is to plan for future CapEx, which means a capital works fund plan. It's in one part of the legislation. That part of the legislation says nothing about the way you fund it. In a completely separate part of the legislation, it's saying that annually owners must consider the capital works plan and how they are best to fund it. Now, New South Wales owners, people in this seminar, pat yourselves on the back. You are fortunate. This is exactly the way that funding legislation should be, which is plan, 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 and more plan, and look to the future. Be very, very precise about it. Work on it as much as you can. And then separately, each year consider what's the best way for you to fund what's going to be in the plan. So it's your choice in this situation, whether you make regular contributions to a capital works fund, or whether you decide to do it by a special levy at the time these works happen, or whether you choose to borrow at the time they happen, or, and very importantly, the fourth consideration, which is what mix of those three are appropriate in your situation. So I think what you're doing here sounds completely right. You are considering what your future needs are. You're looking at the type of people that you are in the type of situation you are, and every owner corporation is different in this respect. And you're considering how you should best fund that. Congratulations.
Thank you very much, Paul. Okay, we've got one for Bruce. This one is a New South Wales question as well. So in our 12-lot strata plan, each lot has 2 balconies. In 2013, our property was issued with a council fire order, which included raising our balcony balustrades. The quote for the balustrade work was around $60,000, and we were given 3 years to comply. Each time we saved the money, the quote had expired and the new cost was out of reach. Our strata committee applied for an extension on the balustrade clause on the fire order, and although we continued to collect a special levy for the job, we could never keep up with the rising costs. Each AGM, I've requested we consider a strata loan, but owners recount horror stories they've heard from other strata properties regarding loans. The balcony slabs have also been spalling. We've got leaking membrane problems. Some slope towards the building where water pools. We need to scaffold the whole building, and the balconies need to be completely refurbished. What are our options?
Thanks, Nikki. Noting this is a New South Wales question, and I'll try and be broad with my response on this, but I guess the first thing I'll point out, regulation in the various states, and in particular New South Wales, is not going backwards. It's constantly going forwards. It's getting tighter and the requirements are increasing. So I think delaying any works, irrespective of what it is, it's not going to decrease the volume of work that you're going to have to do from a regulatory point of view. From a maintenance point of view or from a deterioration point of view, of course, that's going to continue to deteriorate. So you really do need to weigh up your options there, that you're not going to end up with a good outcome by delaying to a period where things are degrading to that level of what you're mentioning there. So I think the first thing I would always recommend is you've got to get an expert involved in determining what the extent is, and also helping to prioritise or rank the risk. Have a look at what is the most important thing to do down to the least important thing, and try and focus that on what your repair methods are going to be used to undertake the work. Secondly, I think obviously a loan would be crucial here. Getting that done first and wrapping it up would be your best option to mitigate those costs. And whilst loans can be seen as big and scary, and none of us like to take loans out, it is essential to do it on this sort of work, because you're going to reduce those costs. And I think in terms of loans, I've not seen bad situations of loans. There's only good outcomes that will come from that. So I would strongly encourage the committee here to consider that, to go down that path and get something happening as quick as possible by engaging an expert, assess the problem, but also get some traction in making it happen now. So.
Okay, thanks very much, Bruce. And Michael, I'll jump to you.
Thanks, Nikki. Bruce is absolutely right. There can be no further delay in this, I would suggest, to the questioner. And one of the consequences of not performing the statutory obligation of maintenance is that you can have the decision-making here taken away from you. It only takes one of the owners saying, there's been this history here. Every time we move on this, the costs go up, problems are getting worse. They paint a picture to the tribunal that the scheme is not functioning, and certainly it's not performing its statutory obligations. And then you've got a compulsory managing agent appointed. And it's the same as being in administration or liquidation as a company. You have somebody else making the decisions. You do not have a seat at the table anymore. They will make the decisions. They will take out the loan. They will strike the levies, or they'll do whatever's necessary to get the work is done, usually within a 12-month period. So don't delay. You've got to take whatever means you have at the moment, and what Paul and Bruce have outlined are probably the means to get on with this before the decision-making process is taken away from you.
Okay, thanks, Michael. And the other thing, I was surprised not to see insurance mentioned in that question at all.
Yeah, I think that's right. I mean, again, there's a question here whether the owners have disclosed to the insurer what the problems are. And there's an issue there if you don't disclose, because we know the law of disclosure requires you to disclose on an ongoing basis to your insurer. And of course, that's basically doing the Samson in the temple exercise. You disclose to your insurer, and then suddenly the temple's falling down on your head because you pull the pillars out. But there's no avoiding it here. You have to disclose to your insurer, and you have to move on. Another reason, Nikki, why this is urgent and needs to be moved on quickly.
Okay, thank you. And Paul, would you like to add some comments?
I can, without rushing into a whole big area, I can only summarize what the others have said. I mean, we've been a lender for 20 years. I'm not aware of any strata loan horror stories. The primary issue is, what are the works that must be done? And that's the real issue, because there's a statutory obligation, and then the other part of it is, how will value be increased? What's the return on investment for those works? The choice of funding of those works is actually a secondary consideration to which are the works which have to be done.
Okay, thanks very much, Paul. This one is for Michael. Given that delays can increase costs, what strategies can strata communities use to foster a sense of urgency and prompt decision making? And why is alignment within the committee crucial for passing special resolutions?
You've got to get ahead of the game. It's like riding a bike or flying an aeroplane. You've got to stay ahead of what you're doing. And that means getting on to what the maintenance is early in the piece, making the decisions, but making sure you take your community along with you. Be clear with your fellow owners and tell them what are the options here, what are the consequences of each of the options, and then ask them for decision, pointing out all the time that this is obligatory. You don't have a choice about it. You can't delay it because they don't want to spend money. If somebody's unit's uninhabitable, or they're losing rent, or any of those things, they can change their mind tomorrow. 1 minute they can be cooperative, the next minute they've talked to somebody at a barbecue who's a lawyer or a bush lawyer, and you find yourself in the tribunal suffering an order for damages, which adds to your bill. It's wasted money. So stay ahead of it, get on board quickly, communicate, make good decisions, take your community with you, and get expert advice in doing so to back you up.
Okay, thank you very much. And Paul, we have another question for you. So many strata communities grapple with the challenges of balancing cost, quality and time in capital works projects. How can committees effectively establish their objectives and priorities to ensure they're making the best decisions for their property? And how can they get alignment on these objectives?
I was afraid that you're going to throw this one to me, Nikki, because it sounds like such a relatively simple question, but the answers to it go incredibly broadly, and we're not going to be able to cover everything here. But let's take some principles from it. The first one is that there is the project management triangle, which is there is cost, there is quality, and there is time. This applies to every project everywhere. It applies obviously to strata projects. And the corollary of that is you can only win on two of those three things. If you are looking to have quality work done cheaply, it's going to take a lot of time for you to invest and make sure it's set up properly. If you want quality work done quickly, then it's going to be expensive. And to me, the worst outcome is if you want cheap work done on time, it's not going to be of quality. And to me, that's the worst thing, but it always have to be mixed up. So that's one of the important things to follow, and you've established that. I think without having a separate seminar on aligning objectives and how group dynamics and how we all work, the thing here is discuss, discuss, and discuss. Actually, as a committee, work out what your objectives are. Which of those three things in the project management sense are you going to go for? If it's time, then you know you're going to have to compromise on quality or on cost. Work those things out. And that can only come from discussion. Now, that's not a great answer to your question here, because we're just leaving unsaid, well, how do we discuss it? And how do we deal with that difficult person or with that other person who has a single agenda and all the other things which happen on committees? But if you have different objectives, either stated or unstated or implied, you're going to have significant problems. The only way is to bring it all and put it on the table and discuss it.
Okay, thanks very much, Paul. And Bruce, did you have anything to add to that? Have you come across anything in committees that you'd like to share with us that could help in this situation?
Look, I think, Nikki, with that one, and Paul is right with the project management triangle there, and it's something that's sort of taught at, I guess, a very early level when managers are appointed or project managers are appointed to jobs. But I think getting back to the obvious, which is appointing experts to help with those decisions along the way, and independent experts that are not emotionally involved, as was pointed out earlier by Michael. You know, people can be involved in projects from a friend point of view or somebody that they've worked with previously. But I think having independents involved, and when we talk about cost, it could be a quantity surveyor, it could be someone else that can help in that area. Similar with time, mapping out the sort of duration that defects may take to manifest, and what time you have versus what time would be practical to disrupt the building. So I think factoring those things in is really crucial, and getting a good decision around each of those before the committee can make a decision, rather than just assuming how long it might take or assuming how much it will cost, or even quality, which comes down to material selection and are you going to go with the good membrane or the cheap membrane, and those sort of things. All of those options have got to be weighed up so that the right decisions can be made. And I think it's really crucial in these situations.
This one is for you, Bruce. We're considering project staging for a major defects project in our buildings. Is project staging a good option? What are the most compelling reasons not to stage projects? And what are the best strategies for approaching large projects with a do it once, do it right mentality?
Thanks, Nikki. Look, first thing I'll point out, staging in strata is common. We do see it often. So if you do have a project that a staging is proposed, don't think that you're necessarily going to disadvantage yourself, although there are some things that need to be considered. The positives, I guess, in terms of staging is the disruption of the building. It could be it's impractical to do all the works at once because you might block off access to the garage on one side or access for fire escapes and things like that. So there can be practical reasons why staging should be undertaken. It could also factor prioritisation of, say, urgent works, where we want to do stage one because that's the worst side of the building, and then we'll consider the other. And of course, budgeting too. It could be you can't afford to do it all at once, so you might break it down that way. The impacts of staging. Economy of scale is what every builder considers when they do a project. And the point I want to make here is stage one plus the cost of stage two does not necessarily equal the total cost of the works. The total cost of the work to do it all at once will always be cheaper than the cost of stage one and two if it's broken down that way. Things like builders' preliminaries, which are all of their insurances, establishment costs, their scaffolding, their site amenities, all of those things are factored in. And those preliminary costs are almost duplicated in the two stages if it is split up that way. So the way you do have to look at it is the works otherwise may have been done simultaneously on the job. They might have worked on two elevations of the building. Therefore, the site manager, which is one of the highest expenses of a project, may only need to be used once instead of returning twice, and the cost will be more. So there's some of the, some of the impacts of staging. And then, of course, the duration is going to take longer by the time you add those two stages up, rather than just getting it done once and least disruption. So there's some good valid reasons to stage jobs. We've done plenty of works that are staged, but if there's any way to compact that work and get it done once, certainly you'll benefit from a cost saving. There's no doubt about that, and a time saving, which leads to less distress on occupants, etc. So.
Okay, thanks, Bruce. And Michael, you wanted to add a comment?
Yeah, Nikki, staging, I think, is obviously a good tool if it's available. But bear in mind that the key functions are for the owners corporation to preserve the common property, to provide habitable spaces for its owners. So if you want to replace the whole of the roof, but one owner at the moment is being impacted by loss of rent, or in fact can't occupy the premises, then what you'll need to do is do something temporarily for that owner to stop the water penetration into their lot, for example, or to fix their problem. Because if you don't do so, that will result in exposing the owners corporation to a potential claim for damages, or to an action to appoint somebody else to do the work because this owner's on an ongoing basis suffering loss or damage. So bear in mind that you've got that statutory obligation, even though there might only be one owner being affected. You can't ask that owner to be the sacrificial lamb in all of this.
Paul, so some owners in our building cannot afford their property and the responsibilities that come with strata ownership. How can owners corporations balance the need to fund capital works with the capital capacity of all owners in their community?
This is a very delicate issue, and one which can sometimes end up with distressing consequences. So I'll probably be quite direct to the point of bluntness in the way I deal with it, but acknowledging that this is delicate and problematic. I think we've come down to say that strata is not a solution for social housing. It was never intended to be. It doesn't fulfill that role. There are people who, when they buy a property, have overcommitted themselves, or since buying the property, the general economics have changed. For example, interest rates may have gone up, or their personal circumstances have changed. But there is some small percentage of people in strata who can no longer afford to own that property. And it's very distressing, clearly for them, and it's distressing for those around. But I think we do ourselves a disservice if we don't acknowledge that fact. There is a lot of the time we think of the owner corporation as being there for the benefit of the owners. You know, I live here, whether I own it or rent it, and the strata should do this for me. And that's usually correct, but it's only one side of the coin. The other side of the coin is that the owner corporation as a legal entity has obligations. And to fulfill those obligations, it must obtain money from its members, the owners. So if we look at the other side of the coin, and this is a very, well, it's not controversial, but perhaps an abrupt thing to say, owners exist to fulfill the needs of the strata corporation, or the owner corporation, the body corporate. Now, we're talking here, and it's really distressing because we're talking about people's homes. Whether it's rented or a residential owner occupier, it's where we live. But also we're talking about property ownership, and it's an asset. If you own an asset, you have equity, and equity, asset ownership, involves obligations and responsibilities. And if you can't meet those, then unfortunately, you can't continue to own that asset. That is extremely difficult. So really, taking this question out, is that how can owners balance the need to fund? Well, you can't. The obligation is to repair and maintain the common property. That can't be balanced with some owners who can't pay. It then becomes an issue of, well, what is the best way in this situation? And there's only three ways, or a mix of them: contributing to a capital works fund, having a special levy, or borrowing. That's all the options we have. And I said before, the mix of those ones. There's a slight, not light at the end of the tunnel, but there's a slight bit in it, which is, it might be that you have one person, I don't know, Mabel, who lives in Unit 11, and everybody knows Mabel, loves Mabel. They're actually prepared to say, well, we'll have a levy, and we know that Mabel won't pay. And so we're willing to contribute extra, knowing that ultimately when Mabel sells, for whatever reason, the body corporate will receive all those unpaid levies. There are some situations where that's an acceptable way to deal with the issue, and people will be happy. But don't see it as a moral issue. When people buy into strata, yes, you are buying into a community, but strata is not where we're accepting the responsibility for the education of other people in the community, or for financial assistance for other people in the community, or health assistance for other people in the community. Those are not the obligations of the owner corporation. And so balancing this actually is something that I don't think you should be attempting to do. It's a harsh reality. I'm sorry to be the person to have to say it, but I think we're all better off if we acknowledge it.
Okay, thanks very much, Paul. And Michael, what would you like to add to that discussion?
Yeah, it's a particularly difficult point, Nikki. I mean, there are a lot of people who are suffering a great deal at the moment, just alone because of interest rate rises. And many of them have been caught, they're long-term owners. But we can't then force on owners corporations the obligation to become a social body that's there to assist with financial assistance to those owners. It'll get to the point where it will simply become worse for everybody, including those owners, if some other owners take the option of, oh, well, I'm going to appoint a compulsory managing agent, or I'm going to get an order for damage because I've been suffering, rental loss for a month, 6 months, 12 months, 4 years. It all just adds to the pile at the end of the day, and you can't keep putting it off. The owners corporation has neither the capacity nor does it have the legal ability to be a social a body that provides assistance to its one or two of its owners, or on a pro tem basis. It simply can't do that.
Are there any consequences for the committee and manager if they decide to do nothing year after year, ignore motions about the statutory maintenance, waste sinking fund money, and then try to impose a special levy on all owners? Now, this question was in Queensland, Michael, but I think it probably has national implications.
It does, Nikki. The language varies around the responsibility of, particularly around communities, whatever they want to be called, councils, strata committees. The states in each jurisdiction have been very loath to impose obligations on committee members, similar to obligations that might exist for directors of companies, because the reality is that the states in each case recognise that this is a volunteer job. It's a terrible job. Quite often you get no thanks for it. You get pilloried for it, and no one wants to take it on. So if you start imposing obligations which equate to or are similar to those that are imposed on directors, then you won't have anybody doing the work. So therefore, it's led to provisions in statutes that say, for example, committees are not liable for anything they do unless they do something in bad faith. So they can do something negligently, they can do something poorly, they can simply refuse to do something because of reasons that in their minds are appropriate, but are not appropriate at law, and they can't be held accountable. So the ability to hold committee members accountable is very, very difficult and very limited. And the same thing goes for managers. Unless they are in breach of either their contractual obligations or their licensing obligations, there's very little recourse usually against the strata managers. The strata managers are there to provide good advice at the time, and I see all too many instances where strata managers simply provide the advice that the committee wants, which is essentially a do-nothing example. I had a recent example where a woman's car was damaged as she exited the scheme because the automatic door malfunctioned, and she was told to make a claim on her insurance, and of course then have to pay the excess and suffer the no claim detriment. And that was quite wrong. The agent should have said, no, this is a failure by the door to function properly, hasn't been maintained, the owners corporation pays the bill. That's what's happening out there. It's very difficult. But it's very difficult to hold those sorts of agents accountable. In most cases, most agents give good advice, but there are other examples where they don't.
Okay, thank you very much. We had a question for Bruce, and this one's from Victoria, Bruce. So the cost of procrastination goes beyond the lack of decisions by the owners corporation. It also includes building firms that fail to act on building defects discovered and informed of before the 10-year after construction ends. Of the latter, procrastination, how can the owners corporation achieve a positive result?
Okay, this one I've seen quite a number of times, and I think the key here is the 10 years. And in most instances, what we often get is owners coming forward at 9.5 years or 9 years or right towards the end, and it's often too late. The key is the time, and really, if you are in a new building, it's crucial to get inspections done early. There's plenty of firms out there that can do these inspections on your building, help to outline what those risks are, because at that end of that 10-year period, if there's problems in your building, you want them to be absolutely minimal and sorted long before that 10-year period. So I think the key is getting engaged really early, and I'm talking in the first 12 months, getting an independent inspection done on the building to help outline any major or minor defects that you want to start getting some action on. And then if a few years expire, you're not getting action from that builder, which we do see. We know there are builders out there who do deliberately delay decisions, but more often than not, those builders are the ones that are getting informed at that 9.5-year mark or really late in the piece. So that's the key to this, is getting started really, really early. And we've been involved in many situations where we've been able to negotiate with the builder nice and early in year 2 or 3, have a good discussion and avoid an escalation by coming up with some practical solutions with them. And so I think there's, like I said, there's lots of experts that can do that, and I would certainly encourage owners to go down that path first, rather than, of course, there'd be avenues through the regulators, even legal avenues, which, you know, hopefully owners don't have to go down, but it can be avoided by early action.
Okay, thanks very much, Bruce and Michael.
Nikki, I was just going to say, Bruce is dead right, but the difficulty you also face is if you let things go on in the current environment, your builder who was there yesterday or at the 2-year mark or the 4-year mark may no longer be in business at the 5-year mark or the 8-year mark. Is it a terrible attrition rate out there? Quite often not the fault of the builders, but it's an industry that's great in flux, so get on with it quickly.
And we had a question for Paul. How can a sinking fund be an expensive form of funding? How can strata committees assess the true cost of a sinking fund and compare its effectiveness with other funding options, such as special levies or strata loans?
Okay, there'll be 3 parts to my answer here. The first part is, I wish this question, I was being asked this question about 4 months' time, because then we'll be launching an online calculation tool called Levy Score, which goes through about 1,000 rows of computer code in calculation to actually work out the answer to this issue, at least all the mathematical aspects to the answer. But that's 4 months' time, it's not now. The second part of my question is, there was a seminar I did, I think it was last year, regarding corporate finance and tax and how that works in strata. I suggest you have a look at that, because that's the expanded answer to the question. But the third part of the answer is that money which is in a capital works fund, and people think I'm against capital works funds, I am not. What I am strongly in favour of is people understanding the positive and the negative aspects of each form of funding as they apply to their particular situation, because every owner corporation is different. There's no one size fits all, and then making informed decisions from there. But talking particularly about a capital works fund, why is it expensive? One is because the money which is in there can only be invested in things which give a very low rate of return, because it has to be invested in very safe things. If the money was in the owner's hands, they could do other things. And this brings us to the corporate finance topic of opportunity cost. Now, opportunity cost is the cost of where the money came from. What is the cost of where that money came from? So if it came from an owner with a mortgage, then that's a 6 or 7% cost pre-tax. If it came from an owner who has credit card debt, then that's a 20% cost pre-tax. The other aspect of opportunity cost is, what could that money be best used for? And if a particular owner could better use that money buying a car or having a holiday or giving it to the kids or investing in the market or whatever it would be, all those things become the opportunity cost. Now, there are emotional and rational factors, and most of the time I focus on the rational because that's what I can calculate. But we also always have to understand the emotional things as well. The other aspect of it is tax. Capital works funds work out quite poorly regarding the tax. And it's an interesting thing that most people, tax is an important part of the reason why we buy a property. For an investment owner, it might be because of negative gearing or things like that. For a residential owner occupier, tax, you might not think of it, but it's underlying the investment return, because you don't have to pay capital gains tax at the end when you sell. Now, tax is a reason or important part of buying into or making a strata investment, but people are not thinking about tax when they're choosing their levies. And look, that's a whole topic in itself we won't get into, but thinking about the after-tax cost is important as well. And capital works funds don't do that well on that regard. I better stop there, Nikki. It's one of my favourite topics, and if I don't stop now, I never will.
Okay, that's fine, Paul. And Michael, you had something to add to that as well?
Yeah, Nikki, look, the good thing is that whilst there's this inevitability about maintenance, and you just have to do it in a strata scheme, you have no choice. As Paul has just outlined, there are several funding options, and you can make an assessment about those. Paul's not saying don't use your sinking fund, don't use your other tools. Make an assessment. You might have to use all three in some circumstances, but get on with it. Pick your option and go with it, because whatever you don't do now will cost you more than any of those options is going to cost you in funding. So you have to plan and get ahead.
That's a critical point, Michael. Thank you.
Thank you, Bruce. So many committees tend to focus on the cheapest option when considering quotes for capital works. So how can owners be encouraged to look beyond the price and consider factors such as contractors' competence, qualifications, and potential for callbacks?
Okay, the first thing I'll add, if we are doing a tender assessment or a quote assessment on any contractor, we don't look at cost, we look at value. And it's really important that owners look at the difference between cost and value, because there's often a very big gap between those. So building work completed at a lower cost doesn't always represent value. So it could be the wrong proposed work that's going to be done. It could be the wrong materials used, the wrong installation, even the wrong contractor selected. So it's really important to assess all of that together. True value in my mind is the short-term cost plus the long-term performance of what you get out of it. So, and when I say performance, is it going to last? Is it not going to fall apart? Is the contractor reliable, and are they going to be still around, and all of those decisions. So again, getting a proper tender assessment done and having a quote analysed and stripped down and questions asked, the right questions, not just about the cost, but about their qualifications, as you point out, about their capabilities, their experience, their availability. Have they got a gap in their workload where they can do this? What at the period of time the owners expect them to do it? It's really, really important those things are factored in. The other point that I often make, remedial work in particular is always a result generally of it being done wrong the first time round. Something's failed in the process. So whatever it is, something's failed. It hasn't lasted as long as it should have, and it needs to be done a second time. So it's really important for owners you don't repeat the mistakes that happened the first time round. And sometimes that could have been that there was a lack of supervision, or the wrong materials were selected, or the wrong method was used, or whatever that case is. It's really important to unpack all of that and get a good visual understanding of what that is, along with the cost, and then make a decision from there. I know it's difficult to not accept the lowest quote. I think we've all had that in life for various products and things we do, but it's really important that you do analyse the whole lot, because the value is what you want to see and what you're going to get out of it in the end. And I think we've used the word quite a few times here, investment. It's your investment, and it's really important that there's value in that. And the biggest point is you do not want to be doing this a third time or a fourth time because you've made a bad decision second time round. This is the owner's opportunity to get it right and make a good call. It's got to be done holistically over considering value, not just that cost.
And would you say at that point it's worthwhile to reach out to someone who can help a committee with that, Bruce? Of course, committees are volunteers. They might not be experts in that area. So how do they make the right choice?
Absolutely. Look, there's plenty of experts that can do that tender analysis for them, and I would strongly recommend they do that. I always often refer to this as a language thing, where you've got to get someone who speaks the right language, who can interpret that. And a good interpreter is an expert who knows that language. They can unpack all that. They might look at the fine print in a contractor's quote and say, I actually know the financial implications of that statement there, whereas an owner may look at that and brush past it and not actually realise that might have a big impact on me later on, had I have considered that. So it's really important to get an interpreter in to look at that, to unpack it all, and to offer back to the owners, this is the real risk, and this is the real impact on you, should you go with this quote. We do see a lot of different I guess clauses and words put into quotes that really need quite a fair bit of consideration and discussion back with the contractor to get that understanding of what the cost implication is. So yeah, really crucial to get some advice on that and get some help, and preferably someone independent, someone not tied into the committee and is emotionally invested in it all, where they might waver towards the cost as opposed to considering other things.
Paul, and this one is, you've emphasised the importance of viewing expert costs as an investment, not an expense. And so what strategies can owners employ to shift committee's mindset from a focus on minimising costs to maximising the long-term value of their investment?
Any cost, whether it's an expert or whatever, any of those things, it's a matter of changing the language and saying, this is an investment I have to make. Going to this committee meeting is an investment. Being on this webinar is investment. Fixing the roof is an investment. And when we change our language and think like that, we're automatically onto the path of saying, if I'm making an investment, what return am I going to get? What emotional return, because I feel good about it? What financial return, because it will increase value or decrease costs? That will change the mindset. Thinking of costs or expenses automatically leads you to think cheap whenever you put those words. And I could just add to Bruce's comment, there's a reason why cheap and nasty are almost always in the same sentence together. So changing that language to investment and to seeking value is the critical thing. And I guess now we'd have to pass over to a psychologist or a psychoanalyst or something to say, well, how do we change people's mindset? Well, the first thing is start using that language yourself and start bringing that into your committee discussions.
Thanks very much, Paul. We're just about up to the end of the session. So before we finish, we like to go back to all of our panelists and just ask them if they've got any final thoughts that they'd like to wrap the session up in. So Paul, we'll start with you.
I'd say, what are the things? Plan, plan, plan. And if planning takes time, that's an investment which must be made. Some people use planning as an excuse for procrastination, but planning is important. Think in terms of an investment and don't think in terms of cost. Change your language and mindset. We want a return on investment. Acknowledge that there are 3 forms of funding, or the fourth is a mix of them all. Look through the positive and the negative attributes of each of those forms of funding to work out what mix is right for you in your particular situation.
Excellent. Thanks very much for that summary. And Michael?
Nikki, I think as I started off, I said there's inevitability about strata maintenance or maintenance of common property in strata schemes. And in committees undertaking that planning that Paul's spoken about, communicating with owners, talking to experts like Bruce to get some assistance, it needs to remember that the fist in the glove is the obligation on owners' corporations to do maintenance and to do it now. And that the consequences of not doing so can add enormously to the cost. Owners can seek damages. Damage to the building can get worse. Your decision-making process can be taken away from you and put in the hands of somebody else over whom you've got no control. So get on with that, but remember all the time that there is an obligation to act now, and remember that in your communication with your owners and your fellow committee members and in picking the options that you've got.
Okay, thanks, Michael. And Bruce, what would you like to leave us with today?
I'll probably just mention, I guess, contractors and also the work itself. And we talked about maintenance and we also talked about remedial work. And what you really want to ensure is your maintenance doesn't become remedial work. For instance, if your building's due for repainting or there might be repairs or something, that can easily lead to remediation work because it causes further damage to the substrate because it's been left too long and the paint's thinned out so much so that it's now damaging the substrate, etc. So we see a lot of examples of that. I really encourage people to get onto it quickly, get that fixed so it doesn't manifest into a bigger problem, which it will. Building deterioration doesn't slow down. It will always keep increasing and causing further damage. The second point I'd make is just with contractors, try and consider how difficult the environment is out there. They will not hold their prices for 90 days or 120 days like they used to 10 years ago. And I don't blame them. The market is volatile. There's a lot of changing costs in labour and materials and that. So respect that, I guess, that if you do run tender processes, be ready to make a decision, have your funding ready, get ready to jump straight away. You will get the best result out of a contractor that way because they'll be geared up at that time to do it. But don't ever have expectations that they're going to wait for you as an owner's corp to make a decision in 6 months at an AGM or something like that. They'll be long gone. They would have started their next project and moved on, and they won't offer the same price back. So again, you'll end up with a cost increase. So it's really just having that broader consideration, I guess, of the industry and the difficulties there are, and making decisions quickly to get the best result for yourself.
Okay, thank you so much. Well, thank you very much, all of you. I really appreciate the time that you spent with us today. If you gained value from this video, please hit like and subscribe to our YouTube channel. If you're looking for information about parking, strata insurance, defects and more, head over to lookupstrata.com.au or sign up to our free weekly newsletter via the link in the description box below.